Hello students, I hope everyone is preparing well for tomorrow examination. From my side, one more video. In this video, I'll tell you the exceptional scenarios. Based on past examination question papers and the practical questions that are there in study material, I prepared a summary document which consists of 80 points. So tomorrow, any MCQ or practical question connected with these exceptional topics, you feel comfortable. And my suggestion, don't watch this video completely at a stretch. The moment you complete one chapter, just come and watch this video. That's it. 80 points, max to max. I'll finish this video in 1 hour, 15 minutes to 1.5 hours. That's it. So total, 14 chapters I'm covering. So the moment you complete one chapter, come and sit 5 minutes, watch this video, and again you close the video, go and study remaining chapters. Getting my point, students? So starting with, preliminary. Once again, I'm telling you, here I'm not explaining the concepts. I'm just giving you alert to message. So if these points are tested in the examination, don't get panic. Be cool and write the answers. Suppose you take private company. Everyone knows the definition of private company. But important point is, while counting number of members, two precautionary measures we have to take. What are those two precautionary measures? Past employees who became members during employment, present employees are not counted, and joint shareholders shall be considered as single member. If you look at past examination papers, 2 times a question came like this. For example, F Limited, as per register of members, there are 250 members. If you go in detail, yes, they are giving breakup like this. Present employees, some 25. Past employees who became members during employment period. 20. Joint shareholders, some 20 couples are holding shares, like that 40, and others like that, they gave a breakup. And finally they asked that company want to convert itself into private limited company. Is it possible or not? Now you have to remember these 2 points to answer that kind of questions. Getting it? Next one, small company. If I ask you what is a small company, everyone tells me paid up share capital 4 crores are limited, turnover 40 crores are. Okay, but the point is you have to remember exceptions. Even though these companies, 5 companies, public, subsidiary, holding, section 8, statutory company, even though these companies satisfy these limits, they won't get status of small company. Previous examinations, I'm very sure, they asked one question like this. Reliance Foundation, or for example, Reliance Foundation, a section 8 company, its paid up share capital is 1 crore, turnover is 10 crores. It want to claim status of small company. Can it do so? Answer is no. Because section 8 company, subsidiary company, public company, holding company, and statutory companies, they can't claim advantage of small company. And one more point, turnover limits, paid up share capital limits, you have to verify every year. So current year, whether it is small company or not, you have to check preceding financial year figures. Suppose preceding financial year figures, limits crossed. Now current year, it is not a small company. Suppose this year limits within the limits only, turnover within the limits, paid up share capital within the limits. Next year, it can gain status of small company. Getting my point, students? Everyone? That's it. Next one, subsidiary company. In subsidiary company, deemed subsidiary concept is important. For example, A Limited is having 60% voting power in B Limited. Now B Limited is subsidiary to A Limited. B Limited cannot acquire shares of A Limited because subsidiary company not to hold shares in holding company. Suppose B Limited is holding 55% of paid up equity share capital in C Limited. Now the question is whether C Limited acquired shares of A Limited. Answer is no. Why? C Limited is deemed to be subsidiary of A Limited. Sub-subsidiary is also a subsidiary. Therefore, C Limited is prohibited from acquiring shares of A Limited. This point is important. And one more important point, shares held as trustee or in a fiduciary capacity is not considered for control. Suppose, A Limited is holding 40% voting power. Remaining 20%, it is holding because it's a trustee for or trustee or a legal guardian, or holding those shares in a fiduciary capacity. Suppose managing director of A Limited, before his death, he made A Limited as a trustee for his son, for MD's son. As a result, A Limited is holding extra 20% voting power. A Limited is holding 20% paid up equity share capital of B Limited. Now, for the purpose of checking holding subsidiary relationship, shares held as a trustee, shares held in a fiduciary capacity shall not be considered. This is extra care you have to take. Government company. Last examination also this point was tested. Subsidiary to government company is also a government company. Government company concept is very important from appointment of auditors point of view. In case of government company, tell me who appoints auditor? C&AG. So this rule is not only applicable to government company, it is also applicable to subsidiary to government company, because subsidiary to government company is also a government company. Getting my point? Very, very important. Very important. Next one, incorporation of the company. In incorporation of the company, if they want to test you, they may ask you, a professional is rendering services, professional is providing advices, directions, instructions. Based on these things, board of directors are doing the practice, or board of directors are following whatever directions given by the professional. Now this professional, will he come under the definition of promoter? Will he be treated as promoter? Answer is no. Exception. Professional rendering services in professional capacity, even though based on his advices, directions, instructions, board of directors are accustomed to follow, but still professional is not considered as promoter. Next one, this point can be tested, chance is there. Remember carefully, private limited company, not only at the time of incorporation, but subsequent to incorporation also, private limited company should have minimum 2 members. Public company minimum 7 members. If this 7 or 2 is getting fallen, then lawmaker is giving a time of 6 months. Within these 6 months, again, the number of members should reach a statutory limit. Or else what happens, the debts, contracts entered after 6 months, not during 6 months. Debts, contracts or obligations incurred after 6 months from the date of reduction, then only the members will get unlimited liability, joint and several liability. Not all members who are aware of the fact, cognizant of the fact, who are aware of the fact that company is carrying business operations with reduced number of members. And here, the point is liability, unlimited liability starts after expiry of 6 months from the date of reduction of number of members. Clear? Okay, fine. Next one, preservation of incorporation documents can be tested as MCQ. Incorporation documents information, everything should be preserved at registered office till liquidation of the company. Place of preservation, registered office. Period of preservation, until liquidation of the company. Next one, revocation of Section 8 company license. Here important point is amalgamation or transfer of leftover assets. Amalgamation is possible with Section 8 company, but which kind of Section 8 company? A Section 8 company with similar objectives or distinct objectives, other objectives. Answer is similar objectives. In past also one question came like this. For example, Hyderabad Sports Club, Section 8 company is there. A lot of fraudulent practices were found out in this company. So government decided to amalgamate this company with another Section 8 company. Now there are two options. One is Delhi Sports Club, other one is Delhi Education Hub. Delhi Sports Club, Delhi Education Hub. Both are Section 8 company. Now tell me, with which company this Hyderabad Sports Club can be amalgamated? Answer is Hyderabad Sports Club can be amalgamated with the Delhi Sports Club, but not Delhi Education Hub, because objectives are not similar. So here, amalgamation with similar Section 8 company is okay. Amalgamation with Section 8 company is okay, but which kind of Section 8 company? With similar objectives or different objectives? Answer is similar objectives. Similar Section 8 company means Section 8 company with similar objectives. Next one, entrenchment of AOA. Here in entrenchment of AOA, you have to remember entrenchment is possible either at the time of formation of company or subsequent to formation through amendment. For that amendment, if you are a private company, then unanimous consent is required. Unanimous consent from all of your members is required. If you are a public company, SR is sufficient. That's it. You remember this point, for inserting entrenchment provisions in AOA. What kind of approval is required? If you are a private company, unanimous consent. If you are a public company, special resolution is sufficient. Next one, shifting of registered office. For long time onwards, this topic is pending. They're not testing this concept, but I'm not explaining this concept. I'll just give you equations. For shifting of registered office, we are having 4 cases. Within same city, change in city, no change in ROC. Change in ROC, no change in state. Finally, last one, change in state. Remember equation, within city, just board resolution, ROC filing is sufficient. Change in city, board resolution, special resolution, ROC filing. Sir, change in ROC, no change in state. Applicable to Tamil Nadu and Maharashtra. From Chennai to Coimbatore, Coimbatore to Chennai. Mumbai to Pune, Pune to Mumbai. Here, board special RD approval, ROC filing. RD gives approval or RD dismiss. RD will dispose the order within 30 days. Once you receive order, file it with ROC within 60 days. And once again, file INC 22, verification of registered office within 30 days. Getting it? Next one, change in state. It's not change in ROC, change in state. So here, board resolution, special resolution, CG approval. Along with CG approval, creditors approval is also mandatory. Creditors approval is also mandatory. Getting my point? So this is what, some trickiness you will find in the examination. Majority of the students today failing because of surprise attack in the examination hall. To eliminate that surprise, I'm just I just came up with this video. Getting my point? So, already power delegated to RD. CG, power delegated to RD. RD will dispose the application within 60 days. But before that, RD verifies whether creditors gave approval or not. Then filing with ROC within 30 days of RD approval, and within 30 days of shifting to new premises, file INC 22 with ROC. Getting my point, students? So, equation. Next one, exceptions to doctrine of indoor management. Based on these points, practical questions may be tested. Indoor management is not applicable where the fellow is negligent, discover irregularities, forgery cases, doubt is about existence of the agency. Or suppose if a person is not having a knowledge of MOA, AOA, no knowledge of MOA, AOA, no knowledge of MOA, AOA, then what happens? Doctrine of constructive notice will apply. If doctrine of constructive notice is applicable, then doctrine of indoor management is not applicable. Next, important, section 19. In section 19, everyone is understanding, subsidiary not to hold shares in holding company. Everyone knows this point. But the important point is, students, they are unable to remember voting. They are unable to remember voting. If subsidiary is holding shares as a legal representative, voting is allowed. If subsidiary is holding shares as a trustee, voting is allowed. But if subsidiary is holding shares because it is holding shares before becoming subsidiary, sir. Before becoming subsidiary, it acquired shares of holding company. Now, it can retain those shares. No problem. No need to surrender those shares. It can retain those shares. But no voting rights on those shares. No voting rights on those shares. Combination of A and C or combination of B and C is possible, ma. So, please pay attention. Next one, Nidhi company. Serving of documents to the members of a Nidhi company. Individual service of notice to the members is possible if they are holding shares face value more than 1,000 or 1% of the paid up share capital, whichever is less. For other members, public notice to other shareholders in local newspapers and notice board of the company is sufficient. If you publish them in a newspaper or if you publish them on the notice board, it's sufficient. But members, holding more than face value of 1,000 or 1% of paid up share capital, whichever is less, for them serve documents individually. That's it, my incorporation also over. Next one, prospectus. In prospectus, identification of listed company and a company which is not listed company is very important. Listed company definition, very simple, ma. Any of its securities listed on any recognized stock exchange, it becomes a listed company. But the point is, few companies, even though they have listed their debentures, preference shares, but still they are not treated as listed companies. Observe carefully. Public company, first of all, they should not list their equity shares. If they list their equity shares, they become listed company. So equity shares unlisted. And next one, non-convertible debentures. It's not convertible. Convertible, no. Non-convertible securities, they must be issued on private placement basis and listed as per SEBI regulations. Non-convertible redeemable preference shares issued on private placement basis. Combination of both. So in both the cases, equity shares unlisted and the securities are non-convertible. On what basis they were issued? Private placement basis they were issued. Even though those securities got listed, still unlisted company. Private company, only non-convertible debenture securities only. Preference shares point is not there. And these securities must be issued on private placement basis. So pay attention, ma. Chance is there. These kind of questions came, straight away write that not a listed company. Not a listed company. Primary condition, once again I'm telling you, equity shares unlisted. Non-convertible debt, non-convertible redeemable preference shares which were issued on private placement basis and listed on stock exchanges, they are treated as unlisted companies only or simply not listed company. Foreign listings, which have not registered, which have not listed equity shares on Indian stock exchange, but whose equity shares are listed in foreign jurisdictions. So equity shares in India unlisted, but those equity shares were listed in foreign jurisdiction, but still this company is not treated as listed company. It is not listed company or unlisted company. Next one, chance is there to include export statement. What are the conditions to be satisfied? First of all, export should be independent. Export should give written consent and that consent should not be withdrawn until a copy of prospectus has been filed with ROC. Next one, deemed prospectus. Many students confuse at deemed prospectus looking at the time limits. See, very simple, whether offer is a deemed public offer or not, very simple, just listen, just remember, company is issuing shares to intermediary I, for example, IH issue house, with a view to offer those shares to public. Now, offer to the public, will it come under deemed public offer or not? It depends on two things. One is, suppose if this offer is made within 6 months from the date of allotment, within 6 months if issue house is making offer to public, within 6 months from which date, company agreed to allot shares in the name of issue house, or company allotted shares in the name of issue house, within 6 months of such allotment or agreed to allotment, if issue house is making offer to public, then it becomes deemed public offer, deemed prospectus will apply. Sir, offer is not given within 6 months, sir, but at the time of offer, at the time the issuers is making offer, some consideration is pending, sir. Whole consideration not received by the company, sir. Suppose consideration 100 crores, sir. Company received so far 99 crores, sir. Now tell me, complete consideration discharged? No, some part consideration is pending. In that case also, that offer to public is deemed to be public offer, deemed prospectus is applicable. Remember, my dear students, when that offer to public becomes deemed public offer, either offer is made within 6 months, or at the time of making offer, full consideration has not been received. Full consideration has not been received means what? Total amount not received. Part amount received, sir, but still total amount not received, right? 100 crores is the consideration, 1 crore pending. That means tell me total amount received or not received? Not received. Some pending is there. Something is pending. That's it. Next one, alteration of objects in the prospectus. Here you have to remember one point, a tricky point. Company, whatever funds they are having, whatever funds company is having, surplus funds, after utilizing for objects stated in the prospectus, for remaining funds, can they trade equity shares of any listed company? Answer is no. Prohibition is there. Prohibition is there. Even members give approval. Speculation in the stock markets is prohibited. And dissenting shareholders must be given an exit option, not by the company, but by the promoters or controlling shareholders. This point is also important. Who will give exit option to the dissenting shareholders? Promoters or controlling shareholders. Next one, misstatements in the prospectus, the punishment. Punishment not a matter. Exceptions is a matter. Suppose under criminal liability, if the person is able to prove that misstatement is immaterial, if that person is able to prove that he had reasonable grounds to prove that statement was true, then he will get no punishment. No punishment. Civil liability, 3 exceptions are there. Withdraw the consent, give notice to the public that without his knowledge his name was added, or he relied on the expert authority. Based on last point, chance is there. Practical question, chance is there based on the last point. Getting my point, students? So experts authority, based on expert report only I give my consent, or else I wouldn't have given my consent. If you are able to prove like that, no punishment under civil liability. Clear? Criminal liability punishment is 447, fraud punishment. Civil liability, just compensate the losses suffered by the investors because of your misstatements in the prospectus. That's it. Next one, Next one. One more point I need to tell you. Civil liability, people get liability just not because of misstatements in the prospectus. Because of that misstatement, any person on the faith of prospectus subscribe the shares, which purchase the subscribe the shares, and finally he incurred the loss. That means he should acquire shares from primary market, not from secondary market. And finally he should suffer loss. Suppose there is no loss to that fellow, sir. Only misstatement is there, sir. Only misstatement. Then civil liability won't come, criminal liability. Sir, misstatement is there, loss is also there, sir. So for misstatement, criminal liability. For loss suffered by the investor, civil liability will come. But in all these cases, prospectus is matter. Misstatement, where is the misstatement? Prospectus, that is a matter. Next one, misstatement, few examples, testing practical questions is possible. A statement in prospectus stated that directors and friends have subscribed a large portion of capital, which was false. This is a misstatement. Prospectus claimed the company had paid regular dividends. In reality, company incurred substantial losses. It was held as misleading due to failure to disclose the truth. This is also a misstatement. Statement about company's turnover was true only if considering production capacity, but misstatement only. Misstatement only. Getting my point? Next one, allotment of securities. In allotment of securities, you have to remember a point that until company makes allotment, all that application money should be kept in separate bank account. Company should not transfer that amount to its personal, to its account. That amount should be kept in separate bank account, and the amount should be utilized only for 2 purposes. One is adjustment against allotment of securities. Second one is repayment of monies. That's it. No other purpose. Majority of the questions, past examination questions like this came. 80% subscription done. Company started utilizing the money. Possible? No. Because for allotment of securities, 3 conditions to be satisfied. One is minimum subscription, amount stated in the prospectus, that condition to be satisfied. Minimum application money, condition to be satisfied. Next one, listing. Company should get approvals from all the stock exchanges with whom or with which they filed application for listing. Only upon satisfaction of these 3 conditions, allotment is possible. Until then, amount should be kept in separate bank account, shall not be utilized for any other purpose. Okay, now everyone. If not, refund within 15 days, or else interest is applicable. You all know that points. Next one, private placement. 200 persons limit. Just don't look at 200 persons, ma. Just don't look at the limit, because while counting 200, two people are excluded: qualified institutional buyers, ESOPs. And this count to 200 is also applicable, not company as a whole, but company for each security. And it's not lifetime limit, it's a limit for financial year. 200 per year per security. While counting 200, qualified institutional buyers, ESOPs, employees under ESOP should be excluded. Next one, for NBFC housing finance companies, these limits will not apply. Respect to Act limits will apply. 200 limit is not applicable. Clear? So they may ask you a question tomorrow. Housing finance company went to private placement covering 16 persons. Any violation or not a violation? For housing finance companies, 200 limit is not applicable. That's it. Respect to regulatory limits are applicable. That's it. One more point, private placement, company is prohibited from making advertisement, and renunciation is also not there. Company offered securities under private placement, company allowed renunciation of the shares. Whether company is complying Companies Act, or is there any violation? Answer is yes, there is a violation. Okay. Next one, ma. Voting rights, ma. Holder of global depository receipts is not entitled to vote until his receipts are converted into shares. Until depository receipts are converted into shares, holder of GDR is not entitled to vote. On behalf of holder of GDR, overseas depository shall vote. That's it. Next one, share capital and debentures. Equity shares with the differential rights. Just give one time reading of defaults, ma. Just give one time reading of defaults. Subsisting defaults, 5 years defaults, 3 years defaults. Like that, points are there. One time before examination, just give one time reading. Next, very, very, very tricky point. If preference dividends remain unpaid for 2 or more consecutive years, then preference shareholders can vote on all resolutions like equity shareholders. This point everyone know. But in examination, they will ask you whether your answer differ if preference shares are non-cumulative preference shares. They may ask you like this. And the answer is whether it is cumulative or non-cumulative or not a matter. Whether it is cumulative or non-cumulative or not a matter. Any preference shareholder whose dividend remains unpaid for 2 or more consecutive years, that fellow is entitled to vote as if he is an equity shareholder. So the treatment is for cumulative preference shares, for non-cumulative preference shares, treatment is same. Next one, ma, variation of rights. Generally for variation, special resolution to be passed or consent from 3/4 of the class capital approval is required. But one more extra point is that is, because of variation of one class, if other class members' rights are getting affected, now other class members' approval is also taken. What kind of approval? Consent of 3/4 of that other class is also required. That means 3/4 of the capital, not only the class which you are altering, but the effect is there on another class, that another class members should also give approval for variation of this first class members' rights. That's it. That means 2 approvals. One is affected class. Second one is the class where you are changing the rights. Class of members whose rights are getting affected, and the affected class of members. These two group of people approval is required. What kind of approval? 3/4 of the capital. 3/4 of the class capital. Calls in advance. Remember, for calls in advance, no extra voting rights, because calls in advance is a liability to the company. No extra voting rights. And company can accept calls in advance only if there is authorization from AOA. Dividends will be paid on face value. It is immaterial whether you were paid calls in advance or not. Dividends will be paid on face value. Suppose if section 51, if AOA authorizes company to pay dividends on face value, paid up value, if dividends to be paid on paid up value, then dividends will be paid on paid up value. No dividend for calls in advance. That's it. It depends on AOA. If AOA authorizes company to pay dividends on paid up value, then company will pay dividends only on paid up value. For that, calls in advance, no dividends. Only interest you will get. Next one, sweat equity shares limits, ma. Limits important, ma. At a time, company can issue sweat equity shares to the extent of 15% of paid up equity share capital or 5 crores, whichever is higher. But throughout the lifetime, it shall not exceed 25% of paid up equity share capital. And for startup companies up to 10 years, 50% paid up share capital is the limit. It's not 25, 50%. So individually, each year limit is 15% or 5 crores, whichever is higher. But total, as a whole, 25% of equity share capital. Sweat equity should not exceed that portion. Next one, ma, Redemption of preference shares ma. Generally preference shares can be issued for a tenure up to 20 years, but companies engaged in infra projects, period can be up to 30, provided 21st year onwards 10% redemption should happen. This is exceptional point I observed in section 55, issue and redemption of preference shares. Next one ma, transfer of securities. In transfer of securities, deceased person, legal representative will have two options. Option 1, get shares transmitted in his own name. That means he become member. Second one is he can directly transfer security to the outsiders. Any option he can choose. One option is either he become member directly through transmission, or he can directly transfer those shares to the outsider. So even though he is not a member, he is having right because member already deceased, right? Yes or no? Assumed that he is a member, he can transfer shares to the outsider. That point. And forged transfer ma. Forged transfer. Here you will find three parties ma. Innocent buyer from forged transferee. Innocent buyer will get compensation from company. Original owner will get compensation from company, and finally company will get compensation from forged transferee. That's it. Next one ma, section 62, further issue of shares. Generally company offering shares to its existing members, no approvals are required. For example, ESOPs, special resolution is required, and private company, IFSC company, OR is sufficient. Suppose outsiders, special resolution plus valuation report, both are required. But these rules, special resolution, valuation report, are not applicable when company converts debentures into equity as per issue conditions. Suppose company previously issued convertible debentures. Now company is converting debentures into equity. Now for that conversion, yes are required or not required. And yes sir, special resolution is also not required when CG is passing an order, asking company, come on, previously I subscribed your debentures, or previously I gave you loans. Now you are not in a position to pay those loans, you are not in a position to redeem debentures. Now come on, convert them into equity. So here there is a direction from CG. So here also yes are required or not required. And one more point, automatically section 61 will also gets affected. How? Central government order, by default alteration of capital will also happen. That means your authorized share capital will increase to the extent of the amount mentioned in the central government order. Next one ma, bonus shares ma. In bonus shares you have to remember, revaluation reserves are prohibited from for issuing bonus shares. Revaluation reserves not allowed. And company at the time of bonus issue, company should not have these defaults. One is interest or principal payments on deposits, debentures, bonds, statutory dues with respect to employees. Keeping these defaults, company cannot issue bonus shares, and company cannot utilize revaluation reserves for issuing bonus shares. Next one, section 67, prohibition on purchase of own shares. Public company cannot provide financial assistance to anyone to purchase its own shares as well as holding company shares. But we had exceptions only point ma. If you're a banking company, lending money in the ordinary course of business allowed. This point is not applicable. Employee share purchase scheme, special resolution required. Trustee should hold shares on behalf of employees, and they should subscribe fully paid up shares. Upon satisfaction of these three conditions, yes, allowed. Employee loans, first of all, employee should not be KMP, employee should not be director, and maximum 6 months salary can be given as a loan. And next one, with that money he should subscribe only fully paid up shares. He should purchase or subscribe fully paid up shares. Upon satisfaction of these three conditions, section 67 will not apply, or else section 67 is applicable. Next one ma, conditions for buyback. Almost 50% completed, 50% of company law completed. Just follow me carefully. Conditions for buyback. In conditions for buyback, limits are important ma. The limits are, up to 10% buyback amount to be invested in buyback. If it is up to 10% of paid up equity share capital, free reserve securities premium, board resolution is sufficient. Beyond this 10%, special resolution is compulsory. But with special resolution also, amount to be invested in buyback should not exceed 25% of paid up share capital, free reserve securities premium. Two conditions important. Amount to be invested in buyback. If it is up to 10% of equity plus free reserve plus securities premium, board resolution is sufficient. Beyond that, yes sir. But with SR also, max to max amount to be invested in buyback should not exceed 25% of capital plus free reserves plus securities premium. Debt equity ratio post buyback should be 2:1. Fully paid up shares only eligible for buyback. Even for preference shares also, redemption, one condition is there. Only fully paid up shares are eligible for redemption. Other shares not eligible. Lock-in period. Once buyback is completed, you have to wait for 1 year. No buyback is allowed up to 1 year from the closure of previous buyback. And shares shall also not to be reissued. Shares involved in the buyback shall not be reissued up to period of 6 months. Of course, those shares can be utilized for not for rights issue, but for bonus, conversion of debentures, conversion of preference shares, conversion of share warrants into shares. For that, you can use the shares that are involved in buyback. Remaining cases not allowed. In debenture section, everything is normal except disqualifications of debenture trustee. So beneficial holder of the shares, not registered owner. I'm the registered owner, you are the beneficial owner. Now you are disqualified to act as a trustee. I'm eligible to act as a trustee. Promoter, director, KMP, officer, employee of the group companies, cash company, relatives of the above people of the company, not group company, of the company. And next one, creditor, next one, debtor, next one, guarantor, next one, person having pecuniary relationship during the current financial year or during the 2 immediately preceding financial year. These people are disqualified from becoming debenture trustee. Okay na? Deposits I summarized exempted deposits into small points small points. If a company is receiving loans from government, foreign sources, foreign government, foreign banks, multilateral financial institutions, public financial institutions, banks, alternate investment funds, real estate investment trust, investment infrastructure trust, venture capital funds, mutual funds, intercompany deposits, these are not treated as deposits. Next, amounts received by Nidhi company, chit fund company, trust amount received by companies which are involved in collective investment schemes, they are also not deposits, exempted deposits. Amounts received through issue of commercial papers, application money pending for allotment up to 60 days, it's not a deposit, provided refund within 15 days. If not refunded within next 15 days, then becomes deposit. In private placement also this point is there. Allotment should happen within 60 days of receipt of money, or else refund within next 15 days, or else company has to pay interest. Remember, that's it. If not refunded within next 15 days, then it is treated as deposit, or else it is not a deposit. Secure debentures not a deposit, convertible debentures not a deposit, listed debentures not a deposit. Startup companies can receive money by issuing convertible notes. That convertibility or redemption should happen within 10 years and under a single transaction 25 lakhs rupees or more amount should be received. 25 lakh rupees or more amount should be received. Then only it's not a deposit. Beyond 10 years or less than 25 lakhs will not come under exempted deposit. Amount received from following persons, employees up to 12 months salary, no interest on that deposit. Directors, in case of private company, relatives of directors can also lend money to the company, but they must file a declaration stating that loan amount lent to the company is out of own funds, not out of borrowed funds. Promoter loans are also treated as exempted deposits, provided they should be unsecured and they gave that money because of stipulation imposed by banking companies or lending institutions. And all business advances, trade advances, immovable property advances, security deposit, long-term projects advance, AMC, EWC, sectoral regulatory advances, subscription for publication, all these are also exempted deposits. But whenever there is a cancellation of the contract, we need to refund that money within 15 days. You refund that money, or else it becomes a deposit. Suppose if case is going on in the court, then count of 15 days will not apply. Until court gives judgment, it is not treated as deposit. Very important very important. Next one prohibition on accepting or renewing deposits. Chapter 5, acceptance of deposit rules will not apply to banking company, NBFC, HFC. So they may ask you a question like this, Diamond Housing Finance Company is there, it want to accept deposits from public. So whether Companies Act 2013 applicable or not applicable? Chapter 5, acceptance of deposits will not apply to Diamond Housing Finance Company since it is a housing finance company. Next one, tenure for deposits. Remember minimum 6 months, maximum 36 months. Of course, short-term purpose, you can accept deposits for a tenure minimum 3 months, but there is a limit. The limit is up to 10% of paid up share capital plus free reserves plus securities premium. Next one, charges. I identified only 2 tricky points. Remaining points is simple only. Those 2 tricky points are crystallization of floating charge. When floating charge gets crystallized, and what are the consequences of crystallization? Once floating charge gets crystallized, it becomes fixed charge. Creditor will get all the benefits as if the charge was a fixed charge. So when crystallization of charge happens, when terms and conditions are violated, when company stop business operations, company goes into liquidation, company enforces security covered by the floating charge. Next one, receiver appointment, manager appointment. This is a very small point. One separate section is there. So whenever a receiver or manager has been appointed, it's a duty to communicate with company and ROC within 30 days of appointment. And same will also apply in case of removal of receiver or removal of manager. Within 30 days, communication should be done. Management and administration. SBO limits, significant beneficial owner limits, 10% of voting power, 10% of dividend rights. Next one, 10% of share capital, or influence, significant influence. Any condition satisfied, that fellow will be treated as SBO. MCQ point of view, limit is important, 10%. Next one, ROC filing deadline for annual return, last attempt, financial statements, filing financial statements with ROC, 8 marks, multiple choice questions came, 4 multiple choice questions came. So this time chance is there to ask, to test annual returns. So annual returns should be filed within 60 days from the AGM. Suppose if AGM not conducted, then no need to file annual returns, sir. No, you have to file annual returns. Then what is the time limit, sir? 60 days from the due date for holding the AGM. So when you have to hold AGM, when you have to conduct AGM, from that date onwards, within 60 days, you have to file annual returns with ROC. And you also required to state the reasons why AGM was not held, why AGM was not conducted. Next one, meeting held at shorter notice. Just to give one time brief reading, for AGM, 95% of members entitled to vote must give consent for calling general meeting AGM with shorter notice. Other than AGM, that means EGM, if it is a company with share capital, 2 conditions to be satisfied. Majority of members holding at least 95% of the paid up share capital that gives right to vote at the meeting. And for other companies, company without share capital, members holding at least 95% of voting power, if they give consent, the shorter notice is valid. Getting it? One more point, if a company wants to conduct AGM at any place in India, AGM, so what are the things to be satisfied? First of all, that company should be unlisted company, because unlisted company can only conduct meeting at any place in India, provided consent of all members is required. Getting it? So listed companies, they should conduct meeting either at register office or at any place in the city, town, village where register office is situated. Next one, yes, AGM, remember that points, day of meeting, any day except national holiday. Important point, that is coming in my point, that is coming in my brain. Day of AGM, any day except national holiday. Time, commencement time should be between 9 and 6. Commencement time, it's not conclusion time, or it's not completion time. Commencement should start between 9 and 6. Of course, meeting can be continued even after 6 also. Place of meeting either at registered office or city, town, village, any place in the city, town, village where registered office is situated. And one more important point is, suppose today I issued notice calling for general meeting. I declared one day as a AGM day. Subsequently, government announced that day as a national holiday. National holiday. Now, can I conduct meeting on that day? For that year, you can conduct, because you already made arrangements. Next year onwards, you are not allowed to conduct meeting on that day. For example, I called meeting on 22nd August. For the time being, 22nd August is not a national holiday. But subsequent to notice, government declared 22nd August as a national holiday. Now for that 1 year, first year, since you already gave notice, you can conduct meeting on 22nd August. But subsequent years, you are not allowed to conduct meeting on 22nd August since it is a national holiday. Okay, now everyone. If a member has voting rights only on a specific resolutions at a meeting, they will be counted only for those resolutions. This is with respect to quorum. With respect to quorum. And one more point, not only for quorum, 95%, while considering 95%, these people should also be considered. Suppose preference shareholders generally not entitled to vote. Suppose on specific resolutions, they are also entitled to vote. Now their consent, 95% of their consent is also to be taken for calling AGM with shorter notice. And next one, lack of quorum. If there is no quorum within 30 minutes, then normal meetings gets adjourned. But if that meeting is called by requisitionist, that meeting stands cancelled. Or meeting was called due to requisition. Either of the cases, remember both the cases, meeting is called due to requisition, or meeting is called by requisitionist. Both the cases, no quorum, no meeting cancelled. All other cases, meeting stands adjourned to the same day, same time, same place, next week. If quorum still not present in the adjourned meeting also, then members present shall form the quorum. Members present shall form the quorum. Original meeting, no quorum. Adjourned meeting, members present shall constitute quorum. Sir, original meeting quorum is there, adjourn meeting quorum is not there. Once again you need to adjourn. Once again you need to adjourn. Are you all getting my points? Everyone? Fine. Next one, right to casting vote. So far not tested. Just remember, if company EOA permits, chairman can cast second vote in case of equality of votes. Generally for OR, votes in favor should be greater than votes against. In case of a situation like this, votes in favor is equal to votes against. To eliminate this deadlock, chairman will be given additional voting power. Generally, chairman is a member. Chairman will be a member. As a member, he will exercise one vote. But when in case of votes in favor equal to votes against, he will be given second vote to remove this deadlock. For that, what is the primary condition we need to satisfy? Company's EOA. Next one, proxy. Maximum proxy can represent either 50 members or he can represent members holding 10% of the voting power. That's it. Beyond that, not possible. 50 members, 50 members put together voting power is 10% only, sir. No problem. Sir, 50 members voting power, 20%, sir. Not possible. You can represent a number of members, max to max, these number of members cumulatively holding 10% of the voting share capital. That's it. If any member is holding more than 10% of the total share capital, he can appoint one person as a proxy, but the appointed person cannot act as a proxy for others. And very, very important point, previous examinations, I have seen this MCQ, MCQ I have seen, MCQ I have seen. In Nidhi company, members' voting rights are restricted to 5%, limited to 5%. Suppose I am holding 2% capital, I will get 2% voting power. You are holding 4% capital, you will get 4% voting power. He is holding 6% capital. He cannot exercise 6% voting power. He can exercise only 5% because voting power is limited to 5% per member. No concentration of power. That's it. Next one. Company is required to provide e-voting. Last attempt, this question came. Section 8 company with 1200 members. E-voting applicable or not applicable? Getting my point, students? See, listed companies compulsory e-voting. Other companies having 1000 or more members, e-voting is mandatory. Next one, who can demand a poll? If it is a company with share capital, either member or proxy cumulatively put together 1/10 of the total voting power or paid up share capital 5 lakhs, whichever condition satisfied, yes, they can demand for poll. It is a duty of company to conduct poll. And by what time poll should be conducted? Matters relating to appointment of chairman, matters relating to adjournment of the meeting, poll shall be conducted immediately. Poll shall be conducted immediately. For all other matters, poll can be conducted even later, but within 48 hours. 48 hours. So 1/10 of the voting power or paid up share capital 5 lakhs, whichever condition satisfied, okay. For other companies, companies without share capital, 1/10 of the voting power. These people, person or persons holding 1/10 of the voting power, they need to demand for poll, then poll will be conducted. Next one, for postal ballot, 10 items are there. For 10 items, 10 prescribed items, alteration of object clause, issue of equity shares with differential rights, variation of rights, like that, 10 points are there. For the 10 points, postal ballot is mandatory. But for ordinary business items, that is adoption of financial statements, declaration of dividend, auditor appointment, director appointment in the place of those retiring one, these 4 items. And next one, where auditor or director is having a right to be heard, right to be heard. So these proposals, postal ballot is strictly prohibited. Next one, adjourn meeting, if a resolution is passed at adjourn meeting, then the effective date of resolution is not original date of meeting, but adjourned meeting date. So when resolution is passed, if resolution is passed at adjourn meeting, that resolution comes into force from adjourn meeting date onwards, not original meeting date. Exclusions from minutes, only chairman is having absolute discretion to include or exclude these 3 matters. Members cannot compel chairman. Members cannot request, members may request, but members cannot compel chairman to remove these matters. It's absolute discretionary at the chairman, absolute discretionary powers of the chairman to whether to include or exclude defamatory content, irrelevant content, immaterial content, detrimental to company interest. Next, coming to the dividends, under New Companies Act, there is no restriction on transfer. There is no limitation or there is no condition that if before paying dividends, you have to transfer this much portion of profits to reserves. There is no such condition. It is up to company to transfer or not to transfer, or it's up to company to declare 100% dividends or not. That's it. 100% of the profit as dividend or not, up to the company. Next one, conditions for declaration of dividend out of accumulated reserves. So here you have to see the conditions. Just try to solve one problem. Of course, in advanced accounting already you solve the problem. Just look at the once, because if your time is too tough, you can expect a problem from this area. So maximum dividend shall not exceed preceding 3 years dividend rates, average of preceding 3 years. Suppose last 3 years no dividends, sir, then condition 1 is not applicable. Condition 2, amount to be withdrawn from reserves shall not exceed 10% of the capital plus reserves. After withdrawal, first set of the losses. And after withdrawal, minimum amount to be left in the reserves should be 15% of the paid up share capital. It should not fall below 15% of the paid up share capital. Next one, Nidhi companies, no need to transfer unpaid dividend to unpaid dividend account later to IEPF. Nidhi companies can credit that amount to the member's account if not claimed within 30 days from declaration. This is one more point, remember. Nidhi companies, directly they can credit amount to the member account. That means member ledger account, whatever member ledger account, Nidhi company is maintaining. So we will credit that amount to the member account. So for that amount, member becomes our creditor. Next one, section 127, punishment exceptions, important. So generally, if dividends are not paid within 30 days, so there is a punishment, 18% rate of interest. So there is a punishment, on the company as well as on the directors, imprisonment and penalty is there. But those imprisonment punishments, will not apply if the cases are, if that situation is falling in these cases. In these 5 points, many students are confused with this second point. Shareholder is giving direction, company cannot comply with the direction, and company should inform the shareholder. First, there is a direction from shareholder which company cannot comply, and company should communicate with the shareholder. Then only exempted from punishment. Suppose if company fails to inform to shareholder, then company will get punishment. Getting my point? And default delay is due to external factors like banking failure, postal strikes, lockdowns. Then in that case also punishment not applicable. Nidhi companies, if dividend payable is 100 or less, company can announce the dividend in local news language in a local newspaper and notice board for at least 3 months. So make that announcement in the newspaper, publish that notice in the notice board for at least 3 months. That's it. Remaining people, serve notice, pay individually. But amount, if it is very less, 100 or less, for that, ask members to come and collect the amount. Next one, account of companies. In account of companies, exemption from CFS. So, following companies, even though, generally company having subsidiary should prepare CFS. But few companies are exempted from CFS. So what are those companies? This company, I'm talking about company which is having a subsidiary and which is also having holding company. Now listen to me carefully. C Limited, generally it is required to prepare CFS considering yes financial statements. But if CFS is unlisted company, and if C Limited receives approval from all other members, okay, no need to prepare CFS, we had no problem. And ultimate holding company H Limited preparing CFS considering the figures of subsidiary companies. So on satisfaction of these three conditions, C Limited is exempted from preparation and presentation of consolidated financial statements. Next one, voluntary revision of financial statements is limited to 3 preceding financial years, and revision maximum 1 time. Once you revise, second time you cannot revise. Revision is allowed only 1 time, once in a year, and it is permitted up to 3 preceding financial years. Reopening of books of accounts is limited to 8 preceding financial years. As you know, books of accounts will be preserved for a period up to 8 financial years, preceding 8 financial years. So far this point not tested, but if came, you should not be surprised. Companies that are governed by NFRA. Companies whose securities are listed on any stock exchange in India or outside India. Unlisted public companies who paid up share capital 500 crores or more, or annual turnover 1000 crores or more, or outstanding debentures deposits 500 crores or more. These companies are governed by NFRA. Special entities like big companies, banking, insurance, generation and distribution of electricity, and special act companies governed by special act. Body corporates incorporated by an act. These companies are also governed by NFRA. Next one, entities referred by central government. Yes, those entities are also governed by NFRA. Next one, material subsidiary company, material associate company. Companies not falling in this above category, but subsidiary to these companies, associate company to these companies, where 20% of the group turnover, group income, group net worth is, if that subsidiary or associate is having 20% of the group turnover or group income or group net worth, then we call that subsidiary or associate company as a material subsidiary, material associate company. Now these companies are also governed by NFRA. Next one, authentication of financial statements. If authorized by board, chairman will sign it. If not authorized, or if chairman is not there, then 2 directors must sign financial statements. One must be managing director, and CEO, CFO, CS if appointed. If CEO, CFO, CS is not there, then this rule is not applicable. If chairman is not there, then this rule is not applicable. 2 directors should sign, one must be MD. That's it. Board report shall be always prepared based on standalone financial statements. CSR net profit calculation, profit from overseas branches and dividends received from companies which are already covered under section 135 shall not form part of net profit for computing CSR. And one more point you have to remember, this net profit is net profit before tax. Getting my point, students? Everyone? So calculation of net worth, just look at the equation once. Revaluation reserves, written back of depreciation, amalgamation reserves are excluded. So failure to spend a CSR amount. So unspent amount shall be transferred to funds specified in Schedule 7 within 6 months of the closure of financial year if it is not ongoing project. If it is ongoing project, then that amount should be transferred to unspent CSR account for next 3 years. And in the next 3 years, that amount should be spent, or else upon expiry of next 3 years, within 30 days, you have to transfer amount to special account, which was specified in Schedule 7, fund specified in Schedule 7. Next one, sir, I spent excess, sir, there is no deficiency, I spent excess, sir, excess CSR amount I spent. That excess portion, how much amount you spent excess, that amount you can claim set off in the next 3 financial years. Next three financial years, you can claim set off. Impact assessment, impact assessment is applicable to companies. All companies are, no. Companies with CSR obligation, 10 crores or more. 10 crores or more only. And for each project, for any project, they spend 1 crore or more in the last at least 1 year, to those projects, impact assessment is compulsory. For impact assessment, company can spend 2% of CSR obligation as an expenditure, or rupees 50 lakhs, whichever is higher. The people who conduct impact assessment, they can charge remuneration. That remuneration amount, max to max 2% of CSR expenditure, or 50 lakhs, whichever is higher. XBRL applicability, important point, once applicable, forever applicable. So to which entities XBRL filing is applicable? Listed companies and their subsidiaries. Companies with paid up share capital 5 crores or more, turnover 100 crores or more, companies required to follow Ind AS as per Company Ind AS Rules 2015. For these 4 companies, XBRL is applicable. Once applicable, forever applicable. Next one, audit and auditors, just look at disqualifications once. Holding security, person who partner who holding security directly disqualified. For relative, there is exception up to 1 lakh face value. It's not market value, face value, remember, face value. If limit exceeded, they held more than 1 lakh, 60 days time is given for corrective action. Next one, debtor to the group companies in excess of 5 lakhs. Guarantor to these companies in excess of 1 lakh also disqualified. Here, person, partner, relative. Next one, there should be no business relationship with the group companies. A relative is a director or in employment of the company as a director or KMP. So person's relative is a director or person's relative is a KMP, then that person is disqualified. Suppose person's relative is just an employee, not director, not KMP, just a clerk or supervisor or just assistant manager. Now no disqualification. One attempt this question came. Person's spouse is working as a supervisor in the company, neither director nor KMP. Now this fellow is not disqualified, allowed. Full-time employee disqualified. Max to max 20 company audits only. Limit is 20. While counting 20, OPC, small company, dormant company, private company with paid up share capital up to 100 crores. No, it's not up to 100 crores. It is less than 100 crores. These 4 companies are excluded, provided private company should not commit default under section 92, 137. And if any person is convicted by the court for an offense involving fraud, 10 years ban. If that conviction is by tribunal, 5 years ban, 5 years disqualification. Next one, components of remuneration. Audit fees is audit remuneration. Expenses incurred during audit which got reimbursed. This is also part of audit remuneration. Facilities provided to the auditor by the company. Stay facilities, or expert expenses reimbursement, for valuation of inventory. Auditor appointed one expert. That expert gave valuation report, expert charged some fees, and we took that amount from company. That amount is also part of audit remuneration only. But important point is, any amount company paid to the auditor for rendering professional services other than audit, permitted professional services like IT notices handling, GST notices handling, those fees amounts will not form part of audit remuneration. And next one, cases where retiring auditor not to be reappointed. Proposed auditor does not meet qualifications, or auditor is disqualified, or auditor is not giving written notice, written certificate, or auditor has given written notice that he is not willing to be reappointed, or in company resolution has been passed. Has been passed stating that another auditor should be appointed, or retiring auditor should not be reappointed. Next one, removal of auditor. Equation is important. In one attempt, they told like board resolution, special resolution. Finally, they filed application with CG for removal of the auditor. So board plus special plus CG, like that they gave in the question, which is absolutely wrong. So the equation should be like this: first board approval, next go to CG, wait for CG confirmation, then within 60 days call for a general meeting, pass special resolution. If you are an IFSC company, no need to wait 60 days, you just wait 60 days from the date of filing application with CG, you wait. No confirmation from CG, you can assume it as deemed confirmation, you can assume it as CG confirmed removal, then pass special resolution at general meeting. But for all other companies, board resolution, next CG approval, next members approval. Don't try to change equation like board do special resolution, CG approval, wrong equation. Principles of auditor rotation there, incoming auditor, outgoing auditor, some common partners are there, or incoming auditor, outgoing auditor operating under same network, or outgoing auditor, one partner resigned and joined incoming audit firm. So in all these three cases, both incoming auditor and outgoing auditor are disqualified for the next 5 years. Rotation concept, next 5 years disqualification. Next one, foreign company. Here important point is deemed Indian company deemed Indian company. Listen carefully For example, WLPTE Singapore company, WRL or WLV, randomly one book is there here, wildlife name is there, that's why I told that WLV PTE Singapore company is there. In this company, equity share capital is 1 lakh, preference share capital is 2 lakhs. Okay, this company came to India, opened one branch in India. Now our Indian citizen is holding entire preference share capital. 2 lakhs preference share capital is held by our Indian citizen. Now whether the branch office in India, is it a deemed Indian company or not deemed Indian company? Answer is deemed Indian company, because 50%, it's not 50% of equity, it's not 50% of preference, it's not 50% of either equity or preference, it's 50% of paid up share capital. So what is the paid up share capital? 1 lakh plus 2 lakh, 1 plus 2 means 3 lakhs. 3 lakhs into 50% means how much? 1.5 lakh. 1.5 lakh. Here Indian citizen is holding 2 lakhs, almost 66.67%. It becomes a deemed Indian company. Time limit for submission of financial statements, annual returns. For annual returns should be filed within 60 days from the closure of financial year. Financial statement shall be filed within 6 months from the closure of financial year. If at all extension is needed, ROC may grant you extension up to 3 months for any special reason you have shown. Failure to comply with Chapter 22, foreign company cannot enforce contracts. Of course, foreign company can be sued, but foreign company cannot sue outsiders. Claim, counterclaim, set off, all these are not possible until foreign company complies with Chapter 22 norms. And one more point, within 30 days of establishment of branch office in India, they must communicate with ROC having jurisdiction over New Delhi. LLP. In LLP, body corporate definition is somewhat different. Body corporate includes the LLP registered in India, registered outside India, company registered outside India. Body corporate excludes corporation sole, cooperative societies. Financial year definition is also different. If LLP is incorporated after 30th September, it's not 1st January, it's not 1st October. After 30th September, financial year closure date will be 31st March of the next following year. Small LLP limits important, 25 lakhs contribution, 40 lakhs turnover. And disqualified persons, these persons cannot become partners of LLP. Who are those persons? Cooperative society, corporation sole cannot become partner. unsound mind, undischarged insolvent, adjudicated insolvent, including next minor is also disqualified to become a partner. Just give one time reading. Next one, court or tribunal may reduce, whistleblower. For whistleblower, the remedy, the privilege to the whistleblower is court or tribunal may reduce his penalty, may waive his punishment because he is cooperative in investigation. Whistleblower concept. LLP statement of account and solvency should be prepared within 6 months and same should be filed with ROC within the next 30 days. Annual returns should be filed within 60 days of the closure of financial year. Next one, who is having authority for compounding the offences under LLP Act? Regional director or a rank above that. But application should be filed with ROC. Application to be filed with ROC. Who is having authority to grant compounding of offences? RD. Next one, in case of transfer of partner's interest, the transferee or assignee will get share in the distribution of profits, but they cannot participate in management, they cannot participate in LLP activities, even they cannot get access to LLP transaction information also. Okay, na? Next one, for compromise or arrangement, the condition to be satisfied is majority. Condition, remember carefully, majority of the partners or majority of the creditors representing how much value? 3/4 of the value. Majority means more than half. 3/4 value means, what is the contribution amount involved or what is the total dues amount in this into 3/4, minimum this amount. If they give approval, if they agree to the compromise or arrangement, then only tribunal sanctions the compromise or arrangement. FEMA, important, residential status, individual point of view only. Body, corporate, branches, offices, agencies, place of establishment are controlled by Indian resident, then they become residents. But individual point of view, general rule, if it is more than 182 days, period of stay in the preceding financial year, more than 182 days, he is a resident. But this general rule is not applicable in the exceptions. Suppose if a person is going outside India for employment outside India, business outside India, intention to stay outside India for uncertain period, even though his period of stay is more than 182 days in the preceding year, current year, from the date he left India, the day he went outside, he is no more a resident, he is a non-resident. Similarly, a person coming to India for the purpose of employment in India, business in India, or intention to stay for uncertain period. Now here also don't apply period of stay in the preceding financial year logic. Don't apply general rule. From the date he entered in India, he becomes resident. Prohibited current account transactions. Just give one time reading. Before entering into examination hall, give one time reading. Current account transactions, prohibited capital account transactions. Either this or that will be tested. Last attempt this point tested. So this attempt my expectation is prohibited current account transactions will come. CG permitted current account transactions like cultural tours, advertisement in print media by SG or PSU for a purpose other than tourism, international bidding, amount exceeding $10,000 permission is required. Freight expenses, payment of freight to outside, foreign ships, foreign vessel, foreign ship companies. Remember. Next one, sponsorship fees, important point. Sponsorship amount, awards, man of the match awards paid outside India exceeding $100,000 by a person other than international sports body or state sport body or national sports body. By these people, no need of permission. By person other than these people, permission is required. Just give one time reading. LRS for individuals is $250,000. Whereas other than individuals, you need to check, consultancy services for infrastructure up to 10 million. Other services 1 million. Donations 5 million or 1% of foreign exchange earnings last 3 years, whichever is less. Commission 25,000 or 5% of the inward remittances higher. Next one, pre-incorporation expenses 1 lakh or 5% of the investment value. Limits, just give one time reading. Up to these limits, no need to take RBI approval, you can proceed. Beyond these limits, RBI approval is compulsory. Next, these 2 points. I'm a non-resident. When I was non-resident, I acquired some foreign properties. Now I came to India, I became resident. Can I continue to hold those properties? Yes, I can continue to hold those properties. No need to sell them. No need to get back them to India, because all those properties I acquired when I was non-resident. Similarly, I'm a resident. Acquired some properties in India. Later, I became non-resident. I went outside India for employment. Now, is there any obligation on me to return all the properties to Indian government or RBI? No. I can continue to hold such properties. These two are exceptions to Section 3 and Section 4. General clauses act ma, document 4 conditions important ma. Any matter, any substance, means any by any means, writing, typewriting, letters, any means. Next one, intended to be used or which may be used in future. Next one, recording the matter. 4 conditions to be satisfied, then only we call it as a document. Immovable property, land, benefits coming from the land, things attached to the land, permanently fastened to the land, everything is immovable property only. Right to access is also immovable property, but right to drain water is not immovable property. Remember carefully, standing crops, fruits, trees not yet separated from land, all these are immovable properties, but right to drain water is not immovable property. Coming into operation of enactment, if any date is specified, that specific date is commencement date. No date is specified, then president's consent date. Effect of repeal one time give reading, shall not revive earlier laws, shall not affect previous operation of provisions, shall not affect rights acquired, liabilities incurred under old laws, shall not affect punishments, penalties, legal proceedings, inquiry, litigations, there is no impact. Service of document by post service of document by post, properly addressed, prepaid stamp, and posting by registered post. If these 3 conditions are satisfied, then we can assume that document is served. Whether recipient received it or not, it's not a matter. So that's it. The 80 points which I want to cover, I covered. So when I observed previous examination questions, I gone through these points. These points are getting tested. Exceptional points, exceptional topics, clear? So I took almost 65 minutes to complete these 80 points. The moment you complete each chapter, come and watch it. That's it, ma. Okay, all the best for tomorrow examination.